Hello traders, the title of the video is Fibonacci tips and tricks how to master the 78.6% Fibonacci retracement like a top Fibonacci trader. Let's get started. This is a short tutorial to touch on a few things that we have discussed before, to highlight some essential points when we are trading the 78.6% Fibonacci retracement. I may have already touched on those points, but what we're about to do, we're going to expand a bit on those essential points when we are trading the 78.6% Fibonacci retracement. All right, so do not be too hard on me in this tutorial. All right, so the first thing that I want to highlight today or expand on a bit is that if a financial instrument goes up from point A to point B, all right, and then we have a pullback that's in the shape of a sharp correction, bringing the price to the 78.6% Fibonacci retracement level, we will be looking for a bullish trading setup here. The reason is the financial instrument does not come down sharply, all right, without no reason, because the reason why, because you have to understand there was a trend before and there were market participants that were trading, that were buying the stock, and at one point they decide to sell it, and the way they sell it sharply, they sell it very fast, and within 4 or 5 months the price is at a 78% Fibonacci retracement level. Very often, the price will bounce up again at the 78% Fibonacci retracement level because the financial instrument is considered at oversold at this point. But the point I want to highlight here is how fast the price came down to that 78% Fibonacci retracement level. I do not use 78.6%, I use exactly 78%. So looking at this financial instrument, Flag Incorporated, you can see that there was a trend since 1990. That trend has ended in 2008, and here you can see that the price came down very fast, sharp. This is a vertical price progression. So when you see a vertical price progression bringing the price to the 78% Fibonacci retracement level, you want to monitor the reaction of the price at that 78% Fibonacci retracement level. And then once you see a trending setup, monitor a candlestick pattern, you see a valid trending setup there, you will use a top-down trading method to trade it. If you want to buy and hold as an investor, in your portfolio, a stock that has, you see here, it trend up and then a sharp correction brought it to the 78% level, and you want to buy and hold as an investor, you will go to Google Finance, check the fundamentals, perform Google Asset test, check the economy news, check the S&P 500, is it turning from bearish to bullish? Check the Federal Reserve policy, is it favorable to the stock market? Is the money coming into the stock market? Once you are satisfied with those due diligence, minimum due diligence, you can buy and hold, all right, if the company is making money and also has a brighter future. So this is about the sharp correction, bringing the price to 78% Fibonacci retracement level. I have one more example I want to show you here. I'll talk about it in a minute. So I want you to watch the full length for this tutorial. So the opposite is also true when we have a downtrend, and then we see the price, a sharp correction, bringing the price to 78% Fibonacci retracement level, we are likely to see a resistance in that zone. In all cases, this is a trading setup. We draw the line, the horizontal line, so we say priority to bullish signal above and priority to bearish signal below, and we implement a top-down trading method to sell it. All right. The next thing that I want to expand on today, talking about the 78% Fibonacci retracement, is this. I want to highlight one specific price structure, though I did already mention the minimum price move is free. I want to show you one specific price structure, is this one here. When we see a sharp correction, so the first thing you are looking for is a sharp correction, and then the price goes up like this, rally up like this, all right. This is the pattern I want you to remember. If you are using the 78% Fibonacci retracement level, this price structure. I'm going to color it now into red. You can combine that specific price structure with the 78% Fibonacci retracement level. All right, that's it. That's the red price structure. Price goes up, pull back a bit. So what we are doing, we are comparing the first leg of the rally to the second leg. You can see that the second leg is shorter. So if the second leg is very short and the price found a resistance, so we see bearish chart pattern, bearish signal, higher probability bearish trading setup at that 78% Fibonacci retracement level, we will be willing to participate in that trade. So first condition, you want to see a sharp correction. Very good. If I did something like this, comparing the first leg to the second leg, if you see like this, draw the line at 78% level, and implement a top-down trading method. This is what has happened here. So you see here a sharp correction. This is it, sharp correction. First leg, all right, this is what we are talking about. Second leg, all right. And here it is. We compare the last one to the first one. You see that the last one is short. And now what we need to do is to apply Fibonacci extension to that sharp move, the sharp correction. Very, very important, sharp correction. And here it is, the 78% Fibonacci retracement level is a dark green line on my chart. That's it. So sharp correction was completed. Price came up, one long leg, pull back a bit, and a shorter move up. Here we are in the 70. You can see that it went a little bit above it. That's why I say to you, use the top-down trading method. Monitor the reaction of the price there carefully. At least you can wait for this common central lines to couple. You see here how he did it. He break below and retest with the following candlestick bar, and from there traders sold it down. So those are the things I want to expand on about the 78% Fibonacci retracement level. So the first thing that we are looking for, the thing that we were expanding on. So there was a trending first. So people were buying, holding the store for some time. All right, very, very important. And then sharp correction bring the price to 78% Fibonacci retracement level. All right, then we implement top-down trading method. We want to buy and hold. We check the fundamental and everything. The next thing that we are looking for is sharp correction is completed and the price did 1, 2, 3 like this. Compare the first to the second, and you will look for an opportunity to sell here. The opposite is also true in the price. Went up sharply, so a sharp move up. So this one was a sharp move down. So this is the example that we are talking about here. 1, 2, 3. Now the other one is I'm trying to save time. I'm under time pressure to keep this video under 9 minutes. Sharp move up, and then the price, it came down. One similarly, in the other direction, like this, and like this, to the 78% Fibonacci retracement level. All right. So sharp move up, 1, 2, 3 to 78% Fibonacci retracement level. We can also pay attention to that. All right. So those are the things I want to highlight today. And for the downtrend, so price was trending down, people were selling like mad dog, and then we see a sharp correction bringing the price to the 78% Fibonacci retracement level. So this is about how you can combine a sharp correction and the 78% Fibonacci retracement level. Those are the things I want to highlight today, expand a bit on. As always, use a top-down trading method, handle it like a pro, practice until you master it. We can apply this strategy for day trading, so you see it on the hourly time frame after economy news, especially those who are trading for economy news release. Watch out for this kind of price structure at the 78% Fibonacci retracement level. Try to master it before going live. Use a demo account. Once you are ready, you know what to expect. Especially for forex market, you see on the hourly time frame, no farm economy news is released. Try all this training before, sharp correction. Remember this trading strategy. Work on it, master it, and trade it like a pro. And most importantly, use the top-down trading method. Thank you for watching, and speak to you soon.